know, somebody once told me that they said they looked at a resume and the guy was perfectly honest and he was too stupid not to know where to lie. And I was like, whoa. But there's a little bit of truth to that. Again, it's at 30 seconds. We'll talk more about the real pitch when things get very deadly serious and you have to be deadly accurate, because I won't invest in you if you BS me then. If you BS me in the beginning, I think, wow, you're a great saleswoman. Hey, let's talk a little more. Okay, I like that. You got me excited. That's really the important thing. I always say test walk away with friends. So you've written your pitch down. You've gotten it down. You can now say it without a single and it sounds sincere and unpracticed, like it's just coming off the top of your head, even though you've practiced it a million times. Now go to somebody who hasn't heard it, say it exactly the way you would say it, nothing different, and then a minute later say, what are you thinking now? What bounced around your head? What idea did I leave behind? Because that's important. The idea that you leave behind. The idea might be, you confused the hell out of me, but I'd like to hear more. Great. You confused the hell out of me, but I couldn't be less interested. All right, where did I go wrong here? So, you know, keywords that will resonate with people. And again, some keywords will resonate with this person and not with that person. Be strategic about it. I'm okay that that word didn't resonate. I'm okay that I said green. It's a green company. We're focused on the future. And the guy goes, oh, you know, I like to burn things in my backyard on a regular basis. Probably not a good investor for you anyway. It's all right. You know, it's like know who to make friends with and know who to make enemies with. Leaving questions in their head's okay. In 30 seconds, you're not going to answer everything. You know, you might want to answer the big things. You might want to focus on the fact that your company will make some money. And this gets a little aggressive. Don't just pitch a good idea. Implementation is valued more. I always tell people, ideas, you know, some people say ideas are worth millions. I think ideas are worth nothing. And I've had enough in my lifetime, and I've had enough great ideas to know that. Implementation's everything. So when I do an elevator pitch, I like to sort of spend the first 10 seconds about the idea, and then 20 seconds about how we're doing a fantastic job implementing it and about to make a lot of money. Right? We've made money and we're about to just explode. This is so exciting right now. Do we go on to questions, or I keep going?
Whatever you want.
Any questions on the quick pitch? Yeah, yes?
I don't know if now's a good time, or whatever, but it just reminded me as you're speaking. Can you give some examples of people that you heard from at the last event who had maybe not exactly who they were, but things that you liked about the pitches you heard at the last event, and maybe an example of something that you didn't like, just to give somebody, I don't know if that's a hard question.
I want to preface this where Christians had the painful task, and he volunteered for this, and we're so grateful. He was in the angel investor production room all day long, and then he went to the Sharkette tank. So he helped select the 5 finalists that went into the Sharkette tank. So he had to listen to a lot of pitches. So this is valuable insight if he can provide something.
Or maybe the easiest way to phrase it is, why did you pick those 5 women? Is there one that still stands out to you?
Well, you know what's funny is that people say that it's a very subjective thing to listen to pitches. Like, oh, everybody's got a different idea. And yet, when 10 people in the end, 10 different people, 10 completely different backgrounds, all pick the same, independently, the same person is number 1. Independently, the same person is number 2. So there are things that you can do right and things that you can do wrong. I think to tell you what people did wrong in the Shark Tank, and I don't, you don't like to focus on that, is easier. There were people that just came in completely unprepared. You could tell that they hadn't done their pitch at all. You could tell either that, in the Shark Tank, I call it the regular pitch. Let's say the 3, 4, 5 minute pitch. They had a lot of ums. They were doing a lot of thinking. Like, I'm thinking now, answering your question, I think that's okay. When I'm just bleh, I should bleh. There shouldn't, the Pledge of Allegiance, there's no ums in the Pledge of Allegiance. I think, let me think now. They weren't prepared, a lot of the numbers, they weren't prepared. I mean, it's a little different than the elevator pitch in the Sharkette tank, to be fair. So the Sharkette tank would be more like this of a pitch. I'm trying to think what else. They didn't really even know their business. A lot of them didn't know where their money was coming from. So when we'd say, well, where are you getting your revenue? Well, I hope to someday maybe perhaps get it from here. Okay. And I hope perhaps maybe someday you come back. I mean, there's not a lot to say for those kind of things. So I think just unprepared was probably the biggest thing. There's no surprises here. You know, I mean, even from watching Shark Tank on TV, there's enough stuff on the web now. I mean, when I was starting some of this stuff in mid-90s, you didn't have the web as a resource as much. So, you know, almost you as entrepreneurs have less of an excuse now. You can go on the web and see exactly different 30-second elevator pitches. You can see what, you know, there's millions of business plans out there that you can just read and look at and talk to the mission statement and all that other stuff. And yeah.
Could you conversely maybe give us a sample 30-second elevator pitch?
I have that stuff.
Could you conversely give us a 30-second sample elevator pitch?
Me?
Yes.
Well, I'm unprepared. All right, hold on. Challenge accepted. Okay, one of the. Hi, I represent this company called Eureka Trading. We do coin trading on the internet. It's basically like eBay but on steroids, and we match people that are trading coins with the buyers of the coins. We allow credit to be exchanged on each side, and people can buy coins within a package or outside of a package. It's a very big deal for coin traders. We've been in business about 4 months. We've got a running revenue about $200,000, and we believe that with a small investment of capital in additional resources, we'll probably be able to ramp that up to a little over $2 million within the next year.
Wow. A lot of ground in a short period
That was
of time.
quick, right?
That was good.
So I mentioned a little money. Actually, Eureka was a company that Rosetta, one of my companies, invested and did work with in 2001, geez. But I like their name. So I threw in eBay on steroids, and right away everybody got kind of an idea in their head about, I hope anyway, what that meant. And then they do coin trading. It's a weird company. But that's an idea. So I mentioned some money. I mentioned we're doing well. Hopefully I came off a little excited. There's a lot of pressure. I forgot. Anything else? Wait, move on?
10-minute pitch.
Huh?
Right now, the 10-minute
No,
pitch.
I'm not 10-minute. All right. To do your bigger pitch now. Now you're talking, you're in a room with somebody, maybe you go to do a presentation, they give you a half hour. I still say try and spend 3 to 5 minutes. I know it's a little less than the Sharkette tank, so know how much time you have and fill it. Don't fill more, don't fill less. Because believe me, you can talk for hours.
Jumpstart gives you 10 minutes.
Okay, there you
10
go.
minutes total for the whole
Delaware
pitch.
Crossing gives 15.
Oh,
And then questions afterwards.
Well, we have questions afterwards.
I've been the ones where we got like 45 minutes.
It's getting tough these days.
We had a
So
whole,
it's different.
a
It's
whole
different.
slideshow. I got to, a little dance.
And that happens if somebody raises their hands and says, boy, this is really interesting. And then they go through the whole thing later on.
So know how much time you get going in. That's very important. And fill it. I think it's important to fill it. And you can figure out how much you say about each piece. Know the perfect investment and work backwards. So think about the people you're going to talk to. Think about, and you usually, again, go to their websites. You can talk to other people who have gotten investments from them a lot of times, right? So, like for example, a lot of the VC companies I work with in the city, and these are big, institutional investment companies. You could look and see that they invested in these 20 companies. So you call the CEO and you go, hey, so you got $5 million from Milestone Venture Partners. Yeah. Well, what do you guys do and how'd you get the money? Well, we do this and we pitch that. Okay. And then, again, now you really have to start getting more serious. You can't exaggerate as much as I would have recommended before. But you can see what's working, right? So model after success. Know the hockey stick. I don't know if everybody didn't draw one. But essentially, if you've got time and revenue on the bottom, a lot of companies, they kind of do this and say, over time, we'll make more and more money. That's great. Fantastic. As an investor, I want to see something that looks like this. It comes like this, and then it just shoots up. And it looks like a hockey stick. Right? And this goes way back. Do people still use that? I'm going to come up with something clever by now. But everybody says, I want to be the guy that invests not in the beginning of the hockey stick, not as it's ramping up, because this is kind of a proof of concept. This shows that you can actually sell what you're doing. I want to jump in right in this circle right as it hits up. Right? The people that jumped in Facebook didn't necessarily jump in when he was out of his dorm room coding away at night drunk. Right? They invested maybe a little bit afterwards where some other people had already invested. So I think it's important to know that in your head. And again, back to the perfect investment. Perfect investment is when? Right at that corner of the hockey stick. So I can tell you every presentation I did, we made it look that way. Right? So, well, I mean, you have some sales, and then I had my projections. So when I held the thing in front of investors, they saw their hockey stick. Now they're going to argue that my projections aren't reality and blah, blah, blah. But it's a good start to show, hey, look, you'd be jumping in right here. You don't want to jump it up here because my valuation is going to be too high. You're going to hate yourself for jumping in up here. And after we go public, oh, you'll be like, I should have jumped in there. And work backwards. It's very important. You have competition. Everybody in this room has some level of competition. I don't care what you tell me. When you're asked, do you have competition? What are you going to say?
Yes.
No. Always start with a no button. Believe me.
Good job.
Does Facebook have competition? No. But there's this other site called MySpace that is a little bit of what we do. Now nobody even knows about MySpace. But I always recommend, again, because if you have exact competition, don't do what you're doing. Right? If there's somebody doing exactly what you're doing, there's no reason to do it. I don't care if you're going to be selling a hammer. Are there other people on the planet selling hammers? No. Well, there's other hammers, but no hammer like this. This is a lightweight, ultra-durable handle hammer. There is no hammer like this in the market.
I've heard that pitch.
Believe it. But there's other hammers, aren't there, Christian?
And hammers itself.
Those are not really hammers. Those are really stones compared to this is a hammer. So you just have to be, if I'm sitting there talking to you and you're pitching and I go, but doesn't somebody do that? You go, yeah, there's like 15 other companies that do it. Okay, thanks for your time. So there is definitely something unique about what you're doing, or you wouldn't be here. You wouldn't be here today. You wouldn't be spending your time, money, energy, love, patience on this kind of stuff. So when people ask you, is there competition, don't lie, because you don't want to say, there's nothing like this in the world, so you're going to seem foolish. But it's okay to say, no. Well, there is something like it. Back in the day when we had time, there was always the competitive analysis slide that we have. Who's doing kind of what we're doing? These are people that are close, but not quite us. And some were, of course, directly a competitor, and investors aren't dumb and they'll figure that out. But it's also an opportunity for you to show how you differentiate yourself between you and someone else. Why was MySpace any different than Facebook in the beginning? I've done the research, I've seen the movie, I still can't entirely figure it out. So it's a little interesting. I mean, actually, the total segue, but I read this thing that said, why was Facebook so much more popular than MySpace? And this whole article said because MySpace was over-personalized, and Facebook had the same, even with your own homepage, had the same look and feel, which to me is completely counterintuitive, because if I was pitching, I would say, more personalized is better. So, shows that I definitely don't have all the answers. So keep in the back of your head that an investor wants to invest. Right? Again, like dating, people want to date. So if you're in a room with another woman, another man, whatever, you're both there, there's some assumption that you'd like to share your life. You might not get married, but you definitely want to share at least that time together. So an investor and all these groups that have been created are looking for places to stick their money. I'm making 2% in the market, or probably worse today. But I'm making very little money in the market. I would love for somebody to come at me and go, hey, I can return to you 3 times your money. What is it? 5 times in a year and a half, whatever. 10 times in 2 years. Thank you so much for this opportunity. So don't think of yourself as the begging end of the equation. Right? It's an equal equation, both sides. And I think it's important when you go in to think that way. It's like I've helped coach people who were applicants for a job. And a lot of people have this thing that they're going in and kind of begging for that job. Well, that job is open. Somebody's going to fill it. They're actually begging for an employee. So at the end of the day, find the fit. It's very important to think that way, because you don't want to go in begging and desperate or any of that other stuff. listen carefully to objections, take a deep breath, don't be surprised. If they have no objections, they're not interested. So if I politely listen to you, I nod my head, I smile. We've all taken the course in active communication. Yes, Linda, very good. Yeah, thank you. We're all good at it by now. Everybody does that. And then most of the time people walk away and go, God, he hurt me. I'm like, oh my God, I hope I never have to listen to her again. But know that people are actively involved, because most investors, I don't want to speak for everybody, first thing we do is come up with objections, right? Because we're protecting our money and our side of the equation. So first time I'm going to go, yeah, but Facebook, this company MySpace is out there. I'm not going to invest in you. It's already out there. Actually, MySpace is like one of the 4 or 5 other social media companies out there. If they don't have objections, they're probably not interested. And in your head, you need to be ready for those objections. And I used to know I did a great pitch when we always had that handle objection slide, when the top 3 objections from my VCs were the same top 3 objections that I had questions and answered on my slide. And I'm sitting there presenting, and they would say, well, Christian, what about it? Well, let me address that near the end of my presentation. And then another one, let me address it, and then click to the end. And there were the 3 objections and how I successfully handled them. And I'm like, nailed. Because I knew that I had them. Because for 2 reasons. 1, I handled their objections, but 2, we think alike. Right? So, hey, we're simpatico. You're in, I'm in, we're already practically in love. Come on, let's go. Right? I mean, but it's true. At that point, it's kind of like, again, you're dating and you say, oh, my favorite movie is When Harry Met Sally, and the other person goes, me too, you know.
Can you go into a little bit of detail about what those objections were, just so people can get an idea of what they
geez, anything. Like, there's another company that does something just like this. You're going to need too much money. You're asking for too little money. You don't have the right staff. You don't have the right location. You're not going to be able to sell fast enough or ramp up quick enough. Your technology will take much longer to develop than you think it will.
Really?
What else? You know, I haven't done a lot of manufacturing stuff, so I'm sure, you know, manufacturing will take a while to get going. Deals will take longer to get made. That's a big one. A lot of the companies I've been in relied on making a deal with a large pharmaceutical, a large shipping company, Ticketmaster, which these companies move like, you know, molasses. So they'll say, well, you have a 3-month lead time. Your sales is probably 6 months. You know, things like that. You guys have any other objections?
I think you have to test yourself and get those answers beforehand, because. And the other thing I would say is, please don't say when someone has asked you a question, yes, that's a really good question. I have been in things where people say, what's the question, what's the response, and that person said, yes, that's a really good question 5 times in a row. Okay, and I've seen it done a lot by entrepreneurs. So just say, give them the answer. Don't bam, just give them the answer. Okay.
That's a good point.
So we had a meeting last night, and it was a very young entrepreneur who was talking about the young person on his team. He was 22 and the young person was 20. And he handled our objections really well. And we had a lot, because he doesn't have any intellectual property or protection. It's the first to market. You know, how are you going to get out there? You're still in college. And he was so good at handling our objections that I think we're probably going to fund it. So you can't be offended. You really just can't be offended, and you can't take it personally. Because it's going to be hard, because there's some people in these groups who are characters. They're very strong.
Right.
Personalities.
Let's point out something that's really good. When people are asking you questions, they're testing you. They're testing, have they thought about this? Have they looked at it from different directions? So it's not just they really want to know the answer sometimes. They really want to see how you respond. So think about that. How about, you know, when you're in a large corporation, you go to a board meeting, you have every answer to every possible question people could ask, okay? If you do it when somebody's in front of the press, it's the same thing. You have all those answers that you want to give.
Christian,
Yes.
if I might also add, a common feedback that we've received from all the entrepreneur exposés that we've had, listening to the pitches from the investors in Shark Tank, is that unilaterally they felt like, with the exception of the last Shark Tank winner, the women asked for too little funding for what they needed to really grow and scale up their companies. And I'm just putting that out there because I think, I mean, I'm not an angel investor, but if you're not asking for enough money, it almost is a sign that you don't really know exactly what you need to really get scaled up. Is that accurate from an angel investor perspective?
I think so. I mean, we didn't, in a lot of these cases, we didn't actually get to budget. They just kind of threw out a number, and sometimes you're right. You know what, as long as, if I feel like you're throwing out a number, I feel like you didn't put a lot of thought into it, it comes down to that. And I think to your point, you're exactly right. I think when you're asked questions or objections, they really want to see how you react. More than anything, you want to, because I feel like, oh, I'm like, oh, I don't want to deal with you for the next 6 months. You know, when I did consulting, and I used to get paid very well to sit in other people's office, and what I felt was do the work that somebody was making, you know, X amount of money, and I was getting 10X, so I was okay with that. But one of the things, we were doing a list of why people hire consultants, and somebody said, you know, you want to make sure you can look at that person for the next year. I was like, I never really thought of that. But I think that's true for hires, and that's true for almost anything. You know, you're going to be able to deal with that person. Good days, bad days, they kind of quote unquote fun to be around. It might not make all your decision, but it does weigh in a little bit. So if I see somebody handling objections and goes, oh, I never thought of that, or it's a good question. I don't need your, you know, I don't need to feel better about myself today, thanks. It's like dating, I think I've beat that into the ground. You're always selling, so even on that pitch, it's still a sales pitch, right? We'll get into due diligence and financials and all that later, but if the first 30 seconds was to whet their appetite for the 10-minute, half-hour meeting, that 10-minute, half-hour meeting is to whet their appetite to say, all right, we'd like to look in a little bit deeper. Because again, you're not going to walk out with a check after that 10-minute meeting. Well, you might if you're that incredible. I don't want to shoot anybody down. It's unlikely. So chances are, you know, always keep your goal in mind. Like when I was doing sales, the goal was always, I knew I was going to get $1 million project on the first meeting. My goal was to get to the CEO or COO or CTO. That was my goal for that meeting. And like a laser, I was like, so what can I meet with? So what can I meet with CTO? So you're going to go and talk to the CTO and then maybe we set a meeting next week? Question marks, you know. But I knew what the goal was. Then the CTO was like, okay, who do you got to get this approved on the board to sign this $1 million contract? Know what you're going for. And it's okay to help, you know, to be a project manager at all times, I think, and move some of the stuff along. And there's a balance, so I think Liz brought it up earlier. You don't want to seem too eager, right, the 3-6 months window, but don't seem too uneager either. So it's okay at the end, they say, there's usually time they say, do you have any questions? How'd I do? What do you think? Are we ready to perhaps talk again, or would you guys like to meet? They will. I assume you guys will talk, and then maybe we could set up a meeting. You guys could start, you know, I'd like to start showing you my books and showing you how the veracity and the proof of everything I'm saying. You know the process. That speaks volumes about you already, and you're ready to take the next step. So always be thinking about the next step. And I just put there as number 9, be creative. Funding isn't always money. So, for example, I might, if somebody comes to me and says, oh, I need $80,000. Why do you need $80,000? Well, I need to hire a good operations person. Well, could I step in and be your operations person? I'm not saying me, but maybe we find somebody. You give them a little equity, the same equity you would have given away for the money, except now you've got the expertise and you've got somebody else excited and passionate about your money that you're going to take that person and go get more money later, right? So always be, and we'll talk about that in a minute when we talk about what you're going to use the money for, but depending on the type of company you are, you might be better off making a deal than actually getting money. And usually, the legal costs of those kinds of things are a lot less. So you go, let's say you're trying to raise money for a website. Okay, you need, I don't know, $50,000 website. And you completely own your company at that point, and you're going to have to raise $50,000 to get the website, and you're going to have to give away 30% of your company. It's not worth that much at this point. Well, you go to a company, well, like Rosetta used to do a lot of these deals, but we don't anymore, so I'm sorry. You go to a company that does websites, and you say, hey, listen, I'm going to give you 30% of my company for you to build my website. Now, the thing is this, they're in now, right? So then when you go back to them and say, could you make a few more changes for free? They're your partners. They're actually encouraged to make these changes for free because they need you to be successful because they've essentially invested in your company. So think very carefully about what you need the money for and how you can, beg, borrow, steal for it. It's not just about getting money. Move off the pitch track, but I know getting money, when I would go get it, was very different. It was like a smart investment where people who knew the industry, you get money from them, and you knew it would be easier to go public, right? Other people bought expertise at the table. Some people just bought money. And again, when people put in money, they're going to make sure that that money generates more money.
Just one thing to add. When you start your 10 to 20 minute pitch, depending on how long the group gives you, please, at the beginning, remember, they're seeing lots of different companies. At the beginning, please clearly and in layman's terms explain your product or what you do. I can't believe how many times I hear a pitch and I'm still trying to figure out what they do 5 minutes in, and I lose attention. I mean, they just start talking about all this stuff about the industry or whatever, and I'm still trying to figure out what they do. So start with what you do, and don't try to impress them with your lingo about your technology lingo or your pharmaceutical lingo. Tell them in ordinary terms. They'll be impressed by your intelligence and knowledge later. Start that way, please. Otherwise, the whole thing will be off. And be enthusiastic, and please tell them that you're the best investment in the world, but be respectful as well, obviously. And I guess, anything else to add before your turn?
I mean, I will say there's a couple of things in the pitch which is, that Liz talked about, which is really true. I can't believe the number of pitches we sit through that they cannot tell you what they're doing. The other thing, too, is that when someone says this is a game-changing technology, or there's one other phrase which I've blocked out of my mind right now. Those to me are like red flags. I don't want to hear anymore, okay? Because it's not necessarily a game-changing or, it's going to save the world. When you do those things, you cross that line and you over-exaggerate, and people just want to wash it out, okay? They think of you as being naive.
Completely agree.
And I think if people don't object, I'll sit here and talk a little bit. Because actually, I don't think I'm as loud as Christian.
Project as well.
Project as well, that's right. Project as well. As you see on my slide here, this is the big issue. We just sort of talked about it. But it comes from this one phrase: if you cannot describe where you are going, then you cannot get there. And too many plans and too many pitches have that problem. And so the whole piece that I'm going to talk about here is this clarity of the one-pager at the beginning, but then sort of expanded. And Christian talked about sort of that 30-second phrase. Well, the 30-second phrase for your business is the one-pager. And this people can look at. They can see the shape of your business, because this is where we move away from the product. The shape of the business. What is it your product is doing? Where is it going? Do you have IP? How long is it going to take? How much money? How much have you invested? Who are your advisors? We're trying to put a shape around the core of your business so we can decide whether it's interesting enough for us to invest. But we have to know that shape. I have here what we refer to as a classic one-pager, and all sorts of groups use them. We can pass them out or leave them here for later on. But essentially, the one-pager comes, and it's the same document that Liz talked about from AngelSoft. AngelSoft will essentially force you to create this document. So you really need to have all the information before you sit down to do it, please. Yeah. And it is a photo of your business. And different groups use them partly for screening. They can screen you out based on a one-pager. And your job is to get screened in. So the more clarity that you have, it's very important. And I think that's a result of having a good business plan, and we'll talk about the sort of like the 1 or 2 page executive summary. But ultimately, what you're going to do is you're going to be very, very focused. You can answer these things in 2 or 3 sentences, and people tend to sort of run on, and they'll try and put another page attached to it because it's so important. But when you're explaining it to somebody else, you have to step back. A lot of times you're way too close to the business.